Welcome to Cash Chats, the podcast from Be Clever with Your Cash that helps you make the most of your money. I'm Andy Webb.
And I'm Amelia Murray, and today we're going to be taking you through some of the biggest money stories of the week.
And we'll be sharing some of your hits and misses from the last 7 days. This is episode 401 of Cash Chats. So Amelia, this is exciting. This is the first time we have been filming in the same room together.
In life.
I know. Not quite what we were hoping for. We tried to film outside. We were both in London for the Headline Money Awards tonight, and we've been filming some Vox Pops with people which we'll be sharing on our social channels soon. But everything was bad. So we're now in a very lovely travel lodge. So it is what it is, right? But yeah, so how's your week been? What's been going on for you with your money?
It's been good. And one of the things that I tried this week was a no spend day.
How did it go?
Fine. It's actually, I read an article in The Guardian a few weeks ago where 4 of the writers had tried it out for themselves. And they all had kind of different experiences. And I was kind of keen to try it myself. And the first thing I thought was like, well, I work from home and it's actually quite easy if you kind of set yourself. So I did it on a Monday and I was like, I've got food in the house. You know, I can exercise for free, I can go for a run, I can do my things without spending. But you have got to avoid the temptation of, I guess, like going online and being like, oh, I need to buy myself something. So it was fine for me. Tuesday comes along, I'm like, oh, maybe I can do 2 days in a row. No, I can't, because I needed to go get some lemons for dinner. I needed to buy a train ticket to come to London. And I think one of the things that I found interesting from the article was people didn't necessarily spend less. They just shifted their spending to like the next day, which is definitely what I was doing. I also don't want to get caught up in feeling bad if I do end up having to spend money. But I think it's a good exercise for being mindful about putting stuff off if you don't necessarily need it there and then, and kind of reconfiguring where you're spending and on what days and if you really need to. So I think it's a good exercise. I'm going to try and keep it up and see how far I go. But yeah, I don't want to get obsessed with it. And I don't want to, feel bad if I don't do it. Yeah. What about you?
Yeah, I've covered that in the podcast, in the website in the past. Normally around January, because obviously people like doing that in the new year, trying to cut costs. But you're absolutely right. I do think so often people just defer that spending and push it further down the line. So if people are going to follow your example and do the same thing, keep that in mind and just try and reduce what you spend. And speaking of that, we've just been for lunch as well before filming this. And I was shocked, just completely outraged by the price of a can of Coca-Cola in, where was it, Itsu? We were in? £2.20 for a can of Coke. I couldn't believe it.
I know. I saw your outrage.
So, I went round the corner to a little Tesco and it was like £1.10 there, which I still think is a lot of money for a can of Coke. I know all the inflationary prices have pushed things up and we're in a little shock. But so normally I'd be shocked by £1.10, but no way would I pay that. So I didn't.
So you stuck it to Itsu.
So this is me. Yeah. You're getting me in real life there, are you? You're really experiencing what it's been to be like to be Andy Webb. The other thing I've done this week was really exciting. Was just the other day, I went to a in-store gig at a record store. There's a band, an artist called Joe Goddard. He's a band called Hot Chip. Some people you might have heard of him. Big fan of his. One of the few times that actually pleased that the Instagram algorithm kind of knows who I am because it advertised this was happening to me. And I've spoken this before because I've been to a few of these, not for a while, but I bought the CD for $11.99 and that got me entrance to this ticket and he did about 40 minutes. I mean, it was in a, 30 middle-aged men in a record store. It's not quite a sold out crowd at a normal venues that kind of who play. That's amazing value. And I think if you are into your music, you love your bands, just do check out any local record stores if they've got these coming along because you're supporting the local shops, you're buying the product which helps the artists as well as the stores and you're getting a much, much cheaper music experience. So that was a big win for me.
And what are you going to do with that CD?
I'm kind of back into my CDs.
Okay.
Yeah, if a band that I really like, I buy the CD. If I listen to it loads on Spotify, I will then retrospectively buy the CD. Even if I don't listen to it much after that, I feel like then it's given them some kind of support there. Because we know with streaming, and we've spoken about this before, I'm sure, the amount that goes to the artist isn't amazing. So yeah.
Brilliant.
Let's do it. Very excited about that. Let's get on to this week's big stories. And we are recording this a day earlier than we normally would because we were both in London together. But what's happened today on Wednesday, so a couple of days before you listen to this, has been the King's Speech. This is where the new Labour government set out what they want to achieve in the next Parliament. And they've about 40 bills that they have announced. I'm going to take you through some of the ones which are related to money. I'm not going to go into a massive amount of detail on them. One, because there isn't a huge amount, but more it's going to be when it actually gets into law, when they actually pass it, is the idea is that some of them will try and do in the first 100 days, or at least in the first kind of year of Parliament, we'll give you more information there. So you kind of get a sense of exactly what it means for you. But there are some kind of headlines that we know about from the manifesto promises or other kind of chat, but just worth sharing them with you. The first one of these is around the nationalisation of the rail industry, which I think, both been on trains this morning. Mine actually went really smoothly for a change, which was lovely, but we know that's not always the case. So this will be, I think, ultimately, as the different rail companies do contracts expire, brings it back into a kind of Great British Rail or whatever they want to call it, and that hopefully might improve the service and maybe standardise the pricing. It's impossible to know right now exactly what that means for our fares. It could be a good thing, it could be a bad thing potentially, but that is a big thing that will be impacting us. There's also been a lot around house building. We've heard them talking about that, and they're going to try and make it easier to build houses. I mean, this is a long-term thing. We're not going to get anything on this like straight away, houses suddenly appearing next week, next month, next year. But that could obviously, the idea is there, making more homes available for people, hopefully make it more affordable for people. So that could have a massive impact as well. I mean, there are a number of different things. So there are 40 in total. Not all of them are money related, but there's one around pensions in terms of making it easier to consolidate those. So at the moment, if you've worked a number of different places over the years, you might find you've got a pension at each one, and that can be a bit harder to keep track of. So the idea is bringing it all together. I mean, this has been spoken about for years. I remember when I started the Money Advice Service, which is 10 years ago, running their blog, there was this talk about this, United pension. So that's on the way. And there are many more stuff around getting rid of zero work hour contracts, stuff around rights for renters, a huge number of things coming. I say we'll update you on them as we get them.
Great. I have nothing more to add because it hasn't happened yet and I don't know what's going to happen. But my story has actually started happening already. And we're looking at supermarkets and people who are still struggling. The cost of living crisis is still with us. And Iceland have started this new scheme where they're giving away £100 to customers every day. And they've already given away £1,000. So it's been going for a little while. There's no minimum spend. It is for shoppers who have the Iceland bonus card or the food warehouse card, which we have covered on Be Clever With Your Cash. Nikki's done a really good in-depth review of that. It's quite an interesting card compared to kind of other loyalty schemes. But yeah, so they're giving away £100 to kind of customers when they scan, which is interesting when kind of companies, especially supermarkets, when they do that. Kind of stepping into kind of supporting people. Morrison's are also giving away free breakfast at the moment to children and adults as part of a scheme that they're running with Kellogg's. And it's up until early August. So you can go in and get a bowl of Cocoa Pops or something, a piece of fresh fruit. They're also giving away a free children's meal along with an adult meal that costs more than £5. Good kind of ways to kind of help support people. Do be mindful about the Iceland one. Don't just kind of go and shop just for the chance of winning. But it is, interesting when they're sort of, moving into different spaces to support customers.
So is it targeted at like particular customers, or could anyone potentially get this? So
anyone, and the cashier who serves you is also up for, they could get 50 quid as well.
Okay.
So there's kind of, they don't really have that much information on you really, apart from kind of if you've got the card, what you're spending. So it seems to be like a random draw.
It's interesting with the loyalty cards. I've noticed that Tesco recently have been trying to do non-club card type deals, but if you've got a club card, you can get them. So there was this week they talked about 20% off Merlin attractions. A few weeks ago they had money off and eating out, and there was cinema tickets as well. They were doing them, so you didn't need points to get these, but if you were a club card member, you could buy them at a lower price. So it does feel like there's a lot more sort of changes coming in that space. I guess they want more information, they want their loyalty, and that's some of the ways that they'll do it. Mm-hmm. You mentioned also kids, Morrison's doing that thing. That sounds great. They did a jacket potato thing with beans recently as well. And we have just published a big long list of the places this summer which are offering either free kids meals or free kids meals with a purchase, which is the more likely option. When people talk about free kids meals, generally then you have to buy something first, but that still could be a way of saving money. So again, Nikki, she's written this really comprehensive list over at becleveryourcash.com. So if you have got kids and you're looking for ways to save money on eating out, do check that out. The next story I wanted to talk about was something that was in Which, and they were looking at the rise, kind of a seeming resurgence of COVID this summer and the impact that's got on travel insurance. and your holidays. And it does seem like, we know people who have had it at work and stuff. It does seem sort of going around sort of much more. Sure, you're watching or listening to this, you're like, yeah, it's been going around. But you think, okay, it's not the same as before. We haven't got the lockdowns and don't seem to have the restrictions where you go into places. But it is worth thinking about it in terms of your travel insurance, because if you're going away, hopefully you've already got travel insurance. You've already paid for it. Hopefully, when you book the holiday, you got it, because it obviously covers you before you go as well as before when you're away. But there will be some differences in terms of that cover for COVID. Now, most of the time, according to this report from which, you're going to be fine if you get ill before you go, or when you're away, you'll get that care, the attention you need. To claim for it, you're going to need to get that medical certification or whatever it is. So don't just, I've got a test, that's it. Just do check exactly what your insurer needs. But it's certainly worth having a look at that insurance policy, because there might be something in the terms and conditions, and it's not fun, is it? I mean, I hate it. I hate insurance documents at the best of times. Have a look and just see exactly what they might cover you for. So this analysis from which of 129 travel insurance policies found that 30% of products covered cancellation due to a change in the Foreign Commonwealth Development Office advice for COVID, and only 28% covered cancellation for non-COVID pandemic-related restrictions imposed by the Foreign Commonwealth and Development Office. Right, basically means that's a much, much lower amount than you would expect. So have a look and just check that you are covered. And if not, and you are concerned about this summer going away, then yeah, absolutely have a look.
God, travel insurance is a nightmare. I remember in the pandemic, because I was covering it at the time, when all of the reeling back on the cover which the travel insurance were doing. So it was, COVID, anything to do with COVID, they just wouldn't touch. And so it's like, I've had this before with travel insurance, like, often some of the policies are just not worth the paper that they're written on. There are so many exclusions, there are so many gaps in cover. You're like, well, what? It's supposed to cover you in the worst case scenario, which was the pandemic at the time. And it was like, oh my God, it's not giving me anything. So I think, it's really reactive. Keep a real eye on the changes in government advice. Hopefully it won't happen again. But just delve deep into the small print. And that's another thing. Some of these policies, pages and pages and pages long, and it's really boring. But please do have a look, see what you're covered for, because it can change at any time. So my next story is about investing and how lots more younger people are looking towards Reddit. Don't know if you've heard of Reddit. Are you young enough for it?
You keep doing this. You asked me once if I was young enough for. I can't remember.
No, but I don't feel like I am.
Billie Eilish. I think you thought I was too old for Billie Eilish. I mean, no, I'm
just checking in. No, but so Reddit's never been a forum for me. So if anyone doesn't know what it is, it's essentially kind of like a chat forum. It's developed in recent years. It's become like quite an important resource for certain people. They're really big on money, but it's basically normal people sharing their experience with money, giving guidance, giving tips. Normal people, perhaps not experts, but it seems to have a lot of authority. And this is what this research is saying. Within 18 to 34-year-olds. So a quarter of this age group are now getting their investment ideas from Reddit, and that's up from 17% in 2021. 1 in 5 people are getting their investment ideas from TikTok, and that's up from 12%. Newspapers and kind of financial websites are still seen as a resource, but not necessarily with this younger group, and not necessarily as popular. So I think this is kind of really interesting. It's not that surprising to me, but I do think the growth is interesting to me, and I think on the plus side, it's younger people getting more interested in finance, so that's good. Kind of any way that's making the information more accessible is got to be a good thing, but it's sort of less about where you're getting it from and who you're getting it from. We have this on TikTok with finfluencers. Unless you kind of know that they're legit or they know what they're talking about, you can you kind of do a Google or a background check to find out what they're about and where they've got their information from. But it's sort of taking it with like a pinch of salt. By all means, kind of engage and be interested. But then there are certain levels that you have to take to make sure that you're not just plugging your money into a dodgy scheme or following something that isn't legit. And I see it a lot on Instagram and TikTok as well, like these get rich quick schemes, the promises of these high returns. We spoke about on the podcast before, where the FCA were cracking down on those reality TV stars who were promoting a not legitimate scheme. And again, it's like a lot of money stuff is sadly quite boring, but it kind of has to be. We have to remain grounded. So yeah, I'd just be really careful if something looks kind of really flashy and exciting and you've seen it on social media to, yeah, do a few more checks before you make any decisions.
It's interesting about Reddit as well, is that is something that in the, Google, if you're using it, you might not notice quite how much the search results change. But, we run a business which is primarily, the website and where it appears in Google is quite important. But something that's changed quite a lot recently in the most recent algorithm change is pushing Reddit much, much higher up the results. So people are more likely to stumble across this when they're looking for an answer to something. And there will be some really useful stuff on there, but I think particularly when it comes to stuff which is that little bit, well, it's regulated, it's something that we don't talk about too often because of that. You do need to sort of fully understand something before you go through with it. I mean, even the stuff we talk about, it's definitely worth looking into stuff afterwards as well. Talking about a bank switch or whatever, we'll take you through it as much as we can and the details, but I'd still expect everyone just to look over those basic terms and conditions first of all, just in case there's something unique to them that they're not sure about. But I think, the more prevalent this is, more people doing it, the more chance there is for people who don't know what they're talking about or people who are deliberately misleading to take advantage of you. So yeah, really interesting quite how many people are using that as their main source of information.
Next story from me. Grandparents are contributing more to their grandchildren's university fees.
Okay.
Nice story. Lucky people. The statistics are quite interesting. So a quarter of parents reported their children's grandparents are helping to pay for university costs, with these grandparents giving an average of £4,703 a year. That's up from £2,455 a year in 2013, which is interesting because it's outstripping inflation. So if it had kept up with inflation, it would be £3,337.
So it's a lot more.
A lot more. And then at the same time, you've got the parents who are also contributing. Yeah. So 71% of parents contribute to their children's university costs, giving an average of £8,723 a year. So yeah, this is an interesting thing. I think, one of the things that this article was also highlighting is how university remains a financial priority for parents. So it's more important for these parents to help their children go to university than it is to buy a house or to buy a car. Now I can get the car thing as less priority, but yeah, it still remains this priority for parents to support their children. And it's on the up. I mean, I kind of think about university, and I was one of the people who went when it was £3,000 a year, and I'm still paying off the debt. So yeah, I'm still kind of crying about it. But then it went up to £9,000 a year, and I read sort of a headline in a publication as well where someone, even though they have been out of university 10 years, they are on a salary of £74,000 or around that. They are still in debt to student finance, and their monthly payments are only covering the interest. And they're just like, what do I do? Where am I going with this? What am I doing? So actually, if parents and grandparents are able to help, then it is really saving a lot of pain in the long run.
Yeah, I mean, we'll be talking about this, I'm sure, a lot more as the summer goes on, particularly as we get closer to results day, because a lot of, 18-year-olds and their parents are going to be making a decision about whether they actually, if they've got the grades, they actually go through this. And money's going to be the big thing, the big reason why people decide to go or not. So we will come back to that. We'll also be looking at all the different student bank accounts and helping you decide which one is going to be the best one for you if you are going away from the freebies through to the overdrafts. In fact, there have been a couple that have been announced just this week. Nationwide and Santander have already announced their offers, but we'll wait until all of them have got that so we can give you the best picture overall. So do keep an eye out for that if you are interested in it. A couple of last stories to share with you before we get on to what the community's been up to. First of all, inflation. That was announced on Wednesday. It stayed at 2%, which was actually expected for it to drop a little bit. The anticipation was it'd be 1.9%, but it stayed at 2%. That's still that overall target. So in theory, good news. This is what the Bank of England wanted. But I think things haven't necessarily changed in terms of we still expect it to go up a little bit more before the year is out. The big thing that has driven, there's been a kind of things cancelling each other out in the latest sort of price changes based on the last 12 months. Most things are kind of the rate at which they're increasing, it's still going up in most cases, has stayed the same or dropped a little bit. They're increasing at a slightly slower rate. But one thing has kind of evened it all out the other side, and that is hotels. 8.8% up on a year ago. So, I mean, we're in the luxury environs of the Travelodge City Road. But yeah, so that's kind of, certain things. This kind of comes to called service inflation rate as well, which a lot of the economists look at as well in terms of is that rate more important than the underlying inflation rate in terms of what's really happening to our costs? That's something which, some things are going down, some things are still going up at a much, much, much higher rate. And what the kind of thinking is around how that might impact the next Bank of England base rate meeting, the Monetary Policy Committee meeting, which on the 1st of August is the markets and the economists predicting this. They're reducing the chances of there being a rate cut on the 1st of August. Still could happen, and we'll update you obviously when that announcement comes along exactly what happens. But it's now looking like more likely to be the September meeting as well. So again, we'll give you the updates on that. And obviously, one of the big things that does in the base rate, if it does get cut, impact is savings. And there's one bit of research that came through just before recording this from Chase Bank, and they've done a survey and they found that 57% of UK consumers admit to keeping the majority of the money in their current account rather than saving accounts. And the reasons for this include they find it easier to keep track of the money in the current account. They do not have enough money to justify a savings account, or at least they believe they don't. Their current account provides interest and the fear of not being able to access money when they need it. So it's an interesting one. And when we were chatting to people earlier on and doing the Vox Pops, there were a few people who talked about actually savings and how they do automatically move money out, and some really interesting things using roundups. So lots of people thinking about their savings and how they use it. And I thought this was just a good opportunity just to remind people of that, the good reasons. We spoke last week, that research that you've been speaking about on local radio as well, that just getting into a savings habit and moving your money can make you happier in life. So that's one good reason. The budgeting option, people think it's better to manage your money in a current account, and that might feel like the case, but actually it's much harder to track your savings, isn't it? So if you've got your current account, I used to be like this years ago. I didn't actually know how much was savings, how much of my salary would come in, and that would go in, and the bills would come out, and the balance would change throughout the month, but how much of that actually was still kind of accounted for elsewhere. So moving it to a separate account means you know exactly what you've got. You don't accidentally spend it on bits and pieces. We had a guy today talking about his kind of addiction to ASOS apps in the middle of the night. But if that money's not in his account, if it's separate, you can't accidentally spend it or just spend it without being aware. Loads of great reasons to actually move your money across. And of course, the best one, well, not the best one, one of the ones that really makes a difference, although, you might get interest in your current account, there aren't many that do that, and the rates definitely aren't the best. So you will be able to get a higher rate of interest by moving your money elsewhere. And I know people are bored of me saying this probably, but becleverwithyourcash.com/savings is where you will find the top paying accounts across all different varieties. Amelia, myself, and the rest of the team, we update that all day, a couple of times a day, so you will find the best rates out there.
Right, so as promised, we have some shout outs for the community, both good and bad. Archie on Facebook. So Archie said he sold a kart suit, which I googled, a go-karting suit. Love that. On Vinted. He's never used Vinted before, and he bought his postage label through Royal Mail. When the customer paid, it was withheld because it looked like the parcel was never sent because he did it all through Royal Mail. He says the customer was very understanding to begin with, but they got their money from Vinted and now seems to have gone a bit quiet. And he doesn't think he's going to see his £20 again. And he's learned his lesson from Vinted. So with Vinted, if you're new, the way it works is things seem to be everything kind of has to be done through the platform. So a lot of the delivery options, Yodel, Every, they're updated automatically. So once you've sent them, it's updated within the app and it shows when it's been sent. So you don't need to do anything. But if you are sending through Royal Mail, because I've done this before, you have to do it manually. So you have to press the button where you're like, I've sent the parcel. I always upload a copy of the postage receipt as well. So there's proof of postage. But with this, I'd mention this to Vinted. If you've got the proof of postage, even better. Yeah. You've got the proof that you've sent it. And, and if it doesn't arrive or the customer says it hasn't arrived, it's not your fault. So I would definitely raise it with Vinted and see what they say, because it sounds like you've done everything right apart from just update the send. Kind of telling them that you've sent it. And there's normally a 5-day window where you have to do that. And it may be that you missed out that step. So I'd mention it to Vinted and see what they say.
I hope so. I hope that gets sorted all right. As ever, it's always great to hear about your bank switching successes. Mandy said, I'm an avid podcast listener and I received my 75 bank switch from Co-op this morning. This is my 12th successful switch bonus since last May. totaling £1,740. Thank you so much, Andy and the team. That is great to see. Jennifer said, I've got my nationwide £200 bonus through. That's maybe £575 since April 2023. That's fantastic as well. Also, thanks us for our guides and helping navigate through that, which is great. Jennifer also had something else, and this is a really interesting one. Her 11-year-old asked if they could start a pension.
They've been on Reddit.
Yeah. Jennifer says, I didn't know he knew what a pension was, but it turns out he does. So to try to teach him bits and pieces about money. So I'm delighted that something has gone in. I'm told that we can take a look together and work something out. I mean, that's great. I mean, pensions is maybe next level, isn't it? But just having that conversation as you've got kids talking about your own money, it's a great way for those things to kind of seep in and help get those useful habits come through. And I remember some research from the Money Advice Service years ago, and I think it was something about money habits are formed by the age of 7 or something like that. It's quite younger than you would think. So it's never too early to start talking about those general principles. That's things that you kind of picked up from listening to the podcast, watching our videos, or just generally in life. Start getting them through there, and hopefully that means when they're in later life, they have those great habits. That means that they're going to be able to save and build that sort of financial stability.
Absolutely. Next one, Samir invested £20,000 in an ISA in April in the first week and now has 20,976. Not bad. Great. That's the equivalent of a 4.88% return, I calculated. So with investments, people like investing because it, over the long term, can beat inflation. There are risks with it. Your capital is at risk and your money can go up and down. But if you keep it in ISA, it's brilliant because the returns are tax-free. Same with cash ISAs. And as the personal allowance has not grown, we should, really be utilising our ISAs.
Absolutely. We've got a few people with cashback sites. Lynn and Charlie both had issues with Top Cashback and Quidco when they were made claims for apply for a TSB account, extra money you can get reply. That hasn't come through yet. I mean, these can take a long time. I talk about cashback sites a lot. I'm a big fan of them, but sometimes they do take forever. So just keeping an eye on it and making sure the money hopefully does come through. And if it hasn't, if it doesn't appear at all as tracked, let alone being paid for you, then you can put in a claim for that money to come through. So do keep an eye on those things. We've also got some quick wins here from Margaret. She shared that she got a few things. PayPal, spend £10, get £5 back, which is great to see. She and her partner both got £100 each from Nationwide. That fairer share payment came through, so that was good. Anna switched to VF, which I think is Vodafone, I'm guessing, a few months ago, and got a £120 reward voucher this week and waiting for the Top Cashback to pay another 50 quid on top. So it just shows you the power, all these little things you can do. It might be small amounts like a fiver, it might be £100 here or there, but all those extras you can do just on your normal day-to-day spending with a few extra steps can bring in a fair amount. And the last one here is from John, who bought £500 of gift cards for Airbnb from Top Cashback and got £31.50 back. Plus, because he paid with Chase, he got another £5 on top as well, which is something I should have done when I was booking some Airbnb stuff recently. So I've missed out on that. But yeah, it's great to hear all your wins and losses. Don't forget, if you've got a question for us or you want to share every week and get a shout out in the pod, do head to our Facebook community. It's becleverwithyourcash.com/community is a short URL that will take you to the group. You can join us. And then every Friday, I think it is, we post asking for your what's going on, what's been good. And then we give that shout out in this episode the following week. That's it for this week.
Bro, thank you for joining us.
We'll be back with another episode on Tuesday. Until then, cheers.